Good morning. I'm Catherine Ross, and I'm joined by Jim Cramer. We're joining you via Skype this morning in our part to practice social distancing. Jim, can you break down the historic OPEC Plus deal and the pros and cons of this deal?
Right. Well, this is a deal that actually is going to keep the companies afloat. So you're going to see Apache up, Devon is up. We're actually witnessing what I thought is a revival. So let's just go right down because I think that there's a lot of stocks that are most affected. We're seeing Pioneer do well, Marathon, Apache. We're seeing Williams companies, Occidental, Baker Hughes, which even though they had a big impairment, Devon, Hess, and Phillips and Chevron. Those are the ones that are the winners. And they're the winners because oil looks like it's not going to go to the teens. And those stocks reflected the teens.
So you would specifically go for those stocks after this deal?
Well,
those are the positive stocks to you?
I don't like any of the oil companies. I've been saying if you have to own an oil company, you can own Chevron because the dividend is good, or you can own Parsley, Pioneer, EOG. Those are the well-run companies. And then the rest of them are just too hard.
Any stocks that you're looking at before earnings season really kicks off?
Well, I mean, obviously, JP Morgan, concerned about JP Morgan because the banks are down very badly. I don't know if they can have any sort of forecast that matters. Bank of America should be doing well. I don't know whether they can say that things are going to continue well because America's basically shut down for business. So I think that matters. And then Wells Fargo is just a complete mystery. New CEO, Charlie Scharf, who knows? I have no idea.
What about stocks that you don't like ahead of earnings season?
Well, those bank stocks are the ones I don't like because I think that they're the ones that have the most risk of being able to say what is going to happen and what isn't going to happen. I like Netflix. I think that Netflix is going to be something that people are going to say, well, wait a second, they've got some very exciting ones, and that's on April 21st. But for the most part, I'm concerned about the banks. That's what reports this week.
Let's focus on Tesla. What are your thoughts about the stock rising and the U.S. furloughs that they've announced?
Well, I mean, I think the Tesla is a demand-driven stock. I think it can go up because it went down too much. I think that they're the only oil company that only car company is going to have growth. I know that Ford's not going to have any growth. Ford made some cutbacks today. They're talking about having enough money in the third quarter. It's about liquidity. Tesla's got the most liquidity, which is really amazing since it had a lease not that long ago.
Do you think that what specific automotive stocks can survive the coronavirus pandemic?
I think GM can in its current form because they have a lot of liquidity. I think that Ford, if you get to the fourth quarter and business isn't that good, then I think that Ford can survive as it's currently configured. It can survive in a different way. And I think that Tesla's the one to buy.
What are your thoughts on Gilead Sciences' experimental drug results?
Well, I mean, 68% is a pretty high number of who's benefiting from it. At the same time, I think it's got to be some sort of cocktail because 68% is going to turn out to be not enough. It's a very small test. This is the one. It's very interesting because this is you compare that with the drug the president likes, the hydroxy and hydroxychloroquine, and this is one where at least we have some tests that look good. It didn't seem like it had any sort of side effects. Obviously, it's an off-the-shelf drug. It's been used before. I would not buy Gilead off this. A lot of people are buying Gilead off this. I think that you have to buy pastiche. You have to buy, I would buy Regeneron because I think Regeneron is going to have multiple levers. And Regeneron did hit its 52-week high today. And yet I would still buy it.
You just called out Regeneron. I want to ask how many specific stocks of these coronavirus treatment drug stocks would you buy?
I would. The only one that I'm willing to buy off of any sort of vaccine or real help here, antibiotic, is Regeneron. The stock is REGN. It's at $512. Just buy a couple of shares. I had Dr. George Yancopoulos on. He's a very smart guy. Len Schleifer's the CEO. They've been around for a long time, and I think they cured Ebola. I think that they're the ones that have the best hope.
Jim, if you could only buy one stock in quarantine, what would that one stock be?
You want to talk while I'm in quarantine?
Yeah, while you're in quarantine, that maybe supports your life while in quarantine.
Although it supports my life while I'm in quarantine. Um, it would be Netflix. I mean, I've got something to do. I feel like that there's uh, not I would have said Facebook at one point, but yeah, I'm not with my wife, and so I kind of feel that Netflix is something to do when you're alone. Amazon also. I mean, Amazon's the other one because I can sit there and order things so that I've got them the next day. I mean, like I just ordered some Sensodyne toothpaste. I mean, there you go. Why? Well, because I'm out and my wife's not there to get it, and I'm not going to a store. I mean, one of the things that we talk about is fear. Uh, I have fear of going into any crowd. I don't know whether the drugstores could have a crowd or not. So I'd rather just order from Amazon.
What would you do? Millions of Americans are getting this $1,200 stimulus check, and that will range for depending on your family, if you're married, all of those indications. But millions of Americans will receive this base check of $1,200. So, what would you do? What are the top three things you would do with that check?
Well, when I was going to go to Costco and get all the staples that I need, because I don't want to go back and get the staples. So, I mean, that's a natural one. I think that would be very, very good. Uh, I would also, I'd say, get a new computer. I think my computer sucks. I'd like to get one that's called the Dragonfly, the HP Dragonfly. It should be provided, I think, by TheStreet, but if not, I'll buy it and see if I can get reimbursed. I think that's really, really important to have a good PC because I'm on it 24 hours a day.
All right, Jim, and let's talk about the potential stocks impacted by a meat shortage.
Well, the only one that should be bought is Tyson. And, Tyson doesn't have a problem. Tyson sucks. I mean, it really is. I mean, it should be up. It's up 54 cents. How pathetic. I mean, its biggest competitor can't produce the stuff. I made a major mistake with Tyson. I mean, when you look at it, we have a conference call this week. I screwed up with Tyson and I screwed up with Viacom. Taking some CVS off the table because I think that they screwed up. But we can cover those in our other video. But I've beaten myself up enough about Tyson. They're just pathetic, and it's okay. I mean, there's football teams that are pathetic. I mean, these guys can't seem to capitalize off of anything.
Thank you, Jim, for joining us today. I'm Catherine Ross, and we will see you tomorrow.